this video is on accept or reject special offers. Well, what guides managers or maybe accountants to come and know that okay, this offer can be rejected or accepted? Well, it's all about decision making. It all goes down to decision making. And when you are making decisions as an accountant, we want to look at the relevant costs. So most of the time we will be given a certain offer, okay, by maybe our customer. So it all goes down to the relevant costs. No matter what offer the person has given you and has stated, okay, maybe even something less than you're offering, right? You would be like, no, I won't accept. Suppose like maybe you cost your items at 50 kwacha, then someone says, okay, I want to buy more at 30 kwacha, and you'll be like, okay, it's quite lower than what you usually price something at, right? You'll be like, okay, I might say no. But you have to take into consideration, of course, the relevant costs. Or costs, first of all, you look at the costs that it will take to produce what they are asking for, and then of course come and look through and analyze only the relevant costs that will affect your decision to accept or reject a particular offer. So in this video, I want to just show you like just a simple way, to know whether you can accept or reject. So most of the time, when we want to know whether to accept or reject, we get to look at if of course that amount being promised, okay? If amount being promised, I'll just abbreviate it as AMT. If amount promised is greater than our relevant costs that we have computed. So if our amount promised is greater, it's a symbol for greater, is greater than the costs, or should I put in brackets the relevant costs of doing that particular activity. Okay, so you would have your normal working as a company. Okay, normally these are the costs we would incur for such particular orders, but when you have such a special offer, you get to look at what the relevant costs as you are making your decisions, because the relevant costs are very key in decision making. So you would even now ask relevant costs. Well, relevant costs are things that costs that will not be, should I say, fixed in some way, like whatever decision you make, the cost won't change. Such costs are considered irrelevant. Okay, they are even categorized as sunk costs, or things which have already occurred and the like. So relevant costs are things that when you make a decision, even though you do not do it, it will not happen no matter what. Okay, those are relevant costs. And to make more sense, that's why you would categorize most of the time variable costs would appear as relevant. And take note of how I've put that most of the time. Yeah, and most of the time again, most fixed costs would be categorized as irrelevant. So let us look at a simple scenario and get to actually understand this that we're talking about, on whether you can accept, okay, or reject an offer. So look at that, just a scenario, okay, which I actually just thought of here. But to still answer our question, ABC company wants to purchase a one-time offer of 100 bicycles. The normal price for one bicycle is 690. ABC is asking for a discounted price of buying the bicycle at 550 each. Will you accept or reject the offer? So what will happen is that you might even be given another statement, right, showing you the costs that you might incur, okay, to do this particular order, like under your normal structure, like, or your costs that you incur for just producing a bicycle in shorter. So you would even get to compute this, and I want to show you, like, this might even be a possible question, and they even give it, okay, to do this order, there's a possibility that, okay, you take into consideration the following costs to produce that order. So let me even show you. Suppose you are given that, okay, for producing those 100 bicycles that this person, okay, wants to purchase, right? Your accountant, okay, draws up that statement and shows that, okay, these are the total costs that will incur: direct materials of 37,200, direct labor of 9,000, variable overhead of 1,200, fixed manufacturing overhead of 9,000. Then you get your total cost as 56,400. Okay, then you'll be like, okay, the person first of all is offering you the price for one, right? So you equally also try to find the price that you can charge for one, because you've arrived at your total cost of doing this particular project. So divide by 100 bicycles, you will tell me that it should land you on 564. Okay, 564 kwacha for one, according to your calculations as your company. Now this person wants what? He wants to buy them for 550. Your costs are 564 for one. You'll be like, that's too low, right? You'll be like, we're going to lose out. Can we say no to that offer? Well, remember what I said earlier on in the intro of the video. When you're about to make a decision, what are you supposed to look at? The relevant costs, because the relevant costs are what are important to your decision making. So given these costs that you incur as a business for doing any production or any other thing, try and pick out only those that are relevant, and then go back and refer to your decision. Can you accept or no? So look at direct materials. Direct materials are variable by nature, and variable costs change with, of course, production. If you do something, they will change. So do you think direct materials would be relevant? Well, of course they will be. Reason being, these, if you don't make a decision, they won't change, because they move with whatever decision you say you will make. Variable costs will be increasing as you make those things. Okay, so it's relevant. If you say you won't make, no variable costs will be incurred here. That's what happens. And as long as if you say you do not take a decision and the costs are not incurred, then it's relevant. Okay, that's the theory we use under relevant costing. So you have direct labor. This is equally variable, and just as we have explained in the previous one, it's relevant. Variable overheads, just by the name, these are variable. All variable costs, most of our variable costs are considered relevant, because if you partake a certain decision, it's not like you're going to still incur that cost. And if you're making a decision and something will still happen, then what's the whole point of making a decision? If you get what I mean. Yeah. Then fixed manufacturing. Fixed costs are costs that you incur even though you do not produce. Would that be relevant? No. This one would be relevant in our decision. So you would have to make your costs and find the new cost per particular bicycle, and see with the offer that you're being offered for one bicycle, and see, okay, if your cost is lower than what the person is offering now, your relevant cost is lower than what the person is offering, accept. Remember how we started our video. So let's make this table, and now just pick out only those that are relevant and recalculate the costs. So we had is it direct materials? I'll just put DM just for abbreviation sake, 37,200. We had direct labor. We said this one is relevant. We're only picking only the relevant costs. That's all. These affect our decisions. That's direct labor. Then we had variable overhead. I'm also just abbreviating that. It was 1,200. What would be your total here? Because you're not going to include fixed costs. We already gave the reason. Costs that you incur even though you do not make a decision are not relevant. Please take note of that. So I'm just trying to equally punch this, okay, just to see what cost you arrive at. It's 47,400 total cost. Okay, that's your relevant total cost. Then find for one bicycle. What do? Divide by 100. Answer 474 kwacha per bicycle. That's your relevant cost per bicycle. What is a person offering for buying one bicycle? He said if you can at least charge him 550. Remember how the question started? If you at least charge him 550. So it has now looked like our relevant cost is now lower than the promise that this person is offering us, right? So you get to accept such a decision. Why? Because now you've calculated, okay, these are the relevant costs that we will for sure have to incur. Okay, if we take on this offer, and that's what you use to make that decision of accepting or not. Okay, so even though your question had started with, okay, 690 is your standard, you tried to recalculate, okay, with certain costs. Like you are giving the question that, okay, your accountant has done that, and he reached at a point of, okay, maybe what if we charge it 564 instead of the normal 690, like the way the question started, right? And then, okay, be like, okay, we dropped it 564, but this person is offering still something lower. You would just now have to search out from that given detail in your question that look out for the relevant costs and check whether you can accept or not. And apparently we said the person offers you what he wants to buy them at 550. Your total costs of incur that you will incur for this project 474. 550 is greater than your costs. This is in fact the possible revenue that you will get if this person buys, and then your cost at this is above. You do accept such, and that's on your accept reject decisions when it comes to just a special offer. These are special offers that just happen once in a while and you can accept just for once and you get back to your normal business, and that's it.